Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar starts the week on a bearish tone as the price action slips further away from that 73.65 rejection last week and now looks towards the immediate target of 72.25. It has printed a fresh low of 37, but still the technicals are still heavy and therefore promotes a further move down that could even see the challenge of the 60-day moving average around 71.85 and reassess either from those points. It is an action-packed week, starting with the RBA minutes tomorrow, and then we've got also the New Zealand GDP, Australian unemployment rate, and the US Federal Reserve interest rate decision, which is expected to see a 25 basis point hike. That is, and could even see a bit more of a hawkish statement from Jerome Powell. Eyes also will be looking at the Bank of England, where they are also expected to raise rates by 25 basis points. So it is a very action-packed week, and no doubt some of these central banks could give us a bit more of a whipsaw price action. So the Australian dollar should continue its bearish trek at the start of this week. The euro also remaining somewhat heavy as the market rejected late last week the 111 region. And from that has seen a further weaker play and now looks towards the objective, which is around 107.5085. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, rose to an intraday high today of 99.20. Looking at the pattern though, the market is attempting to restage, at least from the RSI, a rebound, but I feel that it's with the US dollar likely to see further strength should weigh on the euro and eventually get down to its bottom side that may see profit taking from that 107.50 area. Looks like dollar yen's squeeze is continuing but getting very close to an overbought area like previously seen here late December. And if we do get a similar pattern, then I feel that we may get a somewhat rejection from that top side, which could be somewhere around 117.95 or a little bit high if the squeeze continues to about 118.5. I feel the market is very much overcooked and now looking for this pullback as there's been no bearish candles since this run from around 114.70-80 area. Sterling is showing a bit of divergence, but at the moment I feel that there could be a little bit of a weaker play into the start of this week, but likely to see a rebound anywhere from 129.40.50 to about 129.85, and therefore could see a bit of a snap to the upside. And if this divergence kicks in, maybe towards 130.60 or 131.20.30 and reassess from there. And with the pound looking a little bit firmer, we can see we've had a bounce in sterling Kiwi off that 190 figure 25 area. Strong divergence coming through here to the bull case, and therefore looks towards 192 to 193 and an objective around 194.20.50. Gold is still relatively heavy after the market rebounded off 1,960. It's back there again, near enough. And with the technicals heavy, could see another down challenge and break this level. If we do see a close under 1,960, then 1,940 is the next objective and a base holding around 1,900. And finishing up with oil, but the market still remains somewhat heavy since that very heavy drop from $125 a barrel to 100. Still keeping an eye on this level at 100 as a break would give further indication to the bear case and look towards $96 a barrel and little beneath there until $88. So let's see how the commodities look for the start of this week to the bear case and may hold there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.